We're going to do a brief video on Lyft Inc, Lyft Stock Analysis, and we are looking at a daily chart of Lyft, and it's got three moving averages on it. It's got a green 5-day, a red 20-day, and a blue 200-day moving average. Let's start back here around March 21st, and we see it put in a peak of around $67, and this stock came down and tested the 200-day moving average in May of 21 and bounced off of it, tried to rally and put in a good decent little rally here up to about 62, and then came crashing back through on a rising 200-day moving average. It bounced around that 200-day moving average from the bottom side until we went firmly into a bear market right here around November 2021, and we've been in a bear market ever since. This stock basically is behaving somewhat classically like a bear market stock. You can see the 200-day rolled over. It's been respecting distance to the 200-day. All this, when I say that, I mean this area right here under the 200-day has been roughly the same from probably January 2022 until April 22, at which time we had this huge collapse. We can see right around here in early May, we dropped from $30 a share to $22 a share, this huge gap which has not been filled yet. And that put us too far away from the 200-day moving average, and we've been essentially going sideways, oscillating back and forth around $16 a share ever since. We put in lows here in the middle of July around the $11 area, high 11s, but essentially we've been oscillating back and forth around the $16 level since May. Now, what's going on right this second? Well, this stock's in a bear market. It's got to get some type of it's got to give some type of signal to investors as to whether or not they should get back into it or whether or not it's going to go down further. Whenever you have a gap to the downside like this spooks people to no end, and nobody wants to get caught in that again. So they're looking for some kind of help here to determine whether or not they should go long on this stock at these low levels. That help is going to come in the form of one of two ways: either an exhaustion sell-off down here to the $4 or $5 level, which could easily happen with this stock in early October, all for entertainment purposes only, all in my opinion, or we need to get a rally in this stock at about, by some, this is saying roughly late October-ish, but it might be a little earlier, up to about the 22 to 23 level. And by that time, our 200-day moving average should come down to about that level. And we need to get a close above the 200-day, support from the 20-day underneath, and a decent looking 5-day moving average. So the moving averages are not really telling us much, but the structure of this market is saying, hey, rally up and show me what you can do against the 200-day moving average, or go and put in a bottom so we can buy it down here. And that's what's going on with this stock, in my opinion. Again, when you stretch it out, you can clearly see we're oscillating at 16, and people are very indecisive as to whether or not to start to buy this stock and get out of this bear market and push it back up here in the 30s. There's a tremendous amount of consolidation and distribution here at 37, right, oscillating back and forth around 37. So people are looking at that. Investors are looking at that, and so we have to get rid of the downside risk yet. I don't see the downside risk out of this stock yet. Again, you could be to $5 easy, but you could also come up here by the second week in October and challenge, or even the first, and challenge your 200-day moving average. So I know that's kind of either or, but that's what I see right now on these moving averages for Lyft. We cover, RBAM Research covers Lyft, but almost all of our stocks today, here's one up here that has some entry prices, but almost all of our stocks today show zero for entry prices because the algorithm has a negative or bearish tone on the market today, and there's very few entry prices out of our 190 stocks today. But we do cover Lyft, and just to go over it real quick, these are 1, 5, and 20-day holding periods. Let me get to the top so you can see it. This algorithm essentially, if you bought in the 1-day column for entertainment purposes only, you have to do your own analysis, but if you bought similar to our prices, you would hold for 1 day and close out the end of trading the next day and take your loss, or take your profits as soon as you got them, and it works the same way for the 5 and the 20. If you bought in the 20, assuming your own analysis said to do so, you could buy in the 20 range column and then hold for max 20 days, take your loss if you didn't have a profit, or you take it sooner if you got a profit. That's how these work. They come out every day before 7 a.m. Monday through Friday for 190 stocks. You can get them all free at rbamresearch.com. In addition to the stocks, we have the most liquid futures contracts, the major forex pairs, and BTC crypto. Everything but the stocks, we have longs or shorts, and the stocks are longs only. Again, Absolutely no cost, no credit card required, rbamresearch.com. Just follow the link in the description below and sign up to get them. If you like this video, please click the like button. If you want to subscribe, please do that. If you have a great comment on how we can make these videos better, please leave it in the comment section. We'd love to hear from you. Keep in mind, everything you've seen or heard on here, including our entry prices and commentary, is all for entertainment purposes only. You have to do your own analysis. You can't use our information for anything other than entertainment, and you definitely trade at your own risk.